Hello and welcome to HouseLux Estate, your go-to channel for all things real estate. We're here to demystify the complex world of property, making it accessible and understandable for everyone. From first-time buyers to seasoned investors, HouseLux Estate is your reliable guide to navigating the real estate landscape. We'll be sharing insights, trends, and expert advice to help you make informed decisions. So sit back, relax, and let's unravel the intricacies of property economics. Today, we dive into the fascinating world of real estate economics. Real estate economics can seem complex, but it's actually based on simple principles. Let's start with the first principle that forms the bedrock of real estate economics: supply and demand. This is a fundamental concept in economics that applies to all markets, including real estate. When the demand for homes exceeds the supply, prices rise. Conversely, when there are more homes available than buyers, prices drop. It's as simple as that. The second principle revolves around location. You've probably heard the phrase location, location, location in real estate. Well, that's because the desirability and value of a property largely depend on its location. Properties in prime locations, such as city centers, or near amenities like schools and parks, often command higher prices. On the other hand, properties in less desirable locations may sell for less. The third principle we're going to talk about is market trends. Real estate, like any other market, is influenced by trends. These could be demographic trends, economic trends, or even changes in lifestyle preferences. For instance, a growing population or a booming economy could lead to increased demand for homes, pushing up prices. Conversely, an economic downturn could lead to a decrease in demand, causing prices to fall. It's also worth noting that market trends can vary by region, city, and even neighborhood. That's why it's important to research and understand the specific market where you're planning to buy or sell property. So to sum it up, real estate economics is guided by the principles of supply and demand, location, and market trends. Understanding these principles can help you make informed decisions when buying or selling property. It can help you anticipate changes in the market, find the right time to buy or sell, and even negotiate better deals. So these principles guide the economics of the real estate world. One of the most fundamental concepts in real estate economics is supply and demand. Let's dive right into it. The law of supply and demand is a basic economic principle that affects virtually all markets, including the real estate market. It's the invisible hand that guides prices, availability, and market trends. To understand this concept, let's imagine a town. If there are fewer homes available than people who want to buy them, we're in a situation of high demand and low supply. This imbalance often leads to increased competition among buyers, resulting in higher property prices. Buyers might even end up in a bidding war, pushing prices even further. This is often referred to as a seller's market. On the flip side, if there are more homes available than there are interested buyers, supply exceeds demand. This situation breeds a buyer's market, where properties may sit on the market for extended periods, and prices may drop as sellers compete to attract buyers. However, it's not just about the number of houses and potential buyers. Quality, location, and timing also play vital roles. For instance, a surplus of luxury homes in a market dominated by first-time buyers could still create a buyer's market. Timing is crucial too. The real estate market tends to be cyclical, with periods of high activity followed by slower times. Supply and demand in real estate are also affected by broader economic factors. For example, a strong economy with low unemployment rates can increase the demand for homes, as more people have the financial security to buy. Conversely, during economic downturns, demand may decrease as people's purchasing power diminishes. These dynamics between supply and demand constantly fluctuate, creating a continuous ebb and flow in the real estate market. It's a dance that requires keen observation, timing, and understanding to navigate successfully. Thus, supply and demand significantly shape the real estate landscape. By comprehending these fundamentals, you're well on your way to making more informed and strategic real estate decisions. Now, let's delve into the importance of location and market trends in real estate economics. Location, as they say, is everything in real estate. But why is that? When we say location, we're not just talking about the geographical position of a property. We're also referring to the quality of local schools, proximity to amenities like shopping and restaurants, accessibility of transportation, and the level of safety and security in the neighborhood. These factors determine the desirability of a location. which in turn influences the value of properties in that area. For instance, a property situated near a top-rated school or a bustling city center is likely to fetch a higher price than a similar one in a less desirable location. This is because buyers are often willing to pay a premium for the convenience and lifestyle these locations offer. On the other hand, an area with high crime rates or poor access to amenities may see lower property values, as these factors make it less attractive to potential buyers. Now, let's shift gears and talk about market trends. These are patterns or tendencies in the real estate market that can influence property values. They can be local, regional, or even national in scope. One trend we've seen in recent years is the rise of remote work, which has led to increased demand for homes in suburban and rural areas. This shift has driven up property values in these regions, while potentially decreasing demand and prices in traditionally high-cost city centers. Another trend to watch is the impact of environmental concerns. As climate change becomes an increasingly urgent issue, properties in areas prone to natural disasters may see their values decline, while those in more sustainable, eco-friendly locations could see a boost. To stay ahead in the real estate game, it's crucial to keep an eye on these market trends. It's not enough to just know the current value of a property. You need to anticipate how these trends could affect its future value as well. It's clear that location and market trends play a key role in determining property values. Economic factors, such as interest rates and the economy's health, also impact real estate economics. Let's delve a little deeper into this concept. A country's economy is like a massive engine with countless parts, all working together. When one part falters, it can affect other parts as well. Similarly, the economy's overall health can significantly impact the real estate market. When the economy is strong and vibrant, people feel more secure in their financial situation. This confidence can lead to a surge in the real estate market as more people are willing to invest in property. They feel optimistic about their ability to repay loans and are therefore more likely to purchase or invest in real estate. On the other hand, when the economy is struggling, people may be more hesitant to make substantial financial commitments, such as buying a house or investing in property. This hesitation can cause a slowdown in the real estate market, leading to decreased property prices and rental rates. Interest rates are another critical economic factor influencing real estate. When interest rates are low, it's cheaper to borrow money, making it more attractive for people to buy homes or invest in properties. This increased demand can cause property prices to rise. Conversely, when interest rates are high, borrowing becomes more expensive, which can deter potential buyers, leading to a decrease in property prices. Inflation is yet another economic factor that can impact the real estate market. When inflation is high, the cost of construction materials and labor can increase, leading to higher property prices. Conversely, during periods of low inflation, these costs may stabilize or even decrease, potentially leading to lower property prices. It's also worth noting that the real estate market doesn't operate in isolation. It's intertwined with other sectors of the economy, like construction, finance, and retail. Changes in these sectors can create a ripple effect that influences the real estate market. As we can see, the state of the economy can greatly influence the real estate market. So understanding these economic factors is vital for anyone interested in real estate, whether you're a seasoned investor or a first-time buyer. We've covered a lot of ground today in understanding the economics of real estate. We delved into the core principles of real estate economics, shedding light on how this complex system functions. It's not just about buying and selling, it's about understanding the intricate dance between supply and demand and how they shape the market. We talked about the crucial role of location and its impact on property values. It's not just about location. It's about understanding how location interacts with other factors to influence market trends. Remember, a prime location today might not be so desirable tomorrow. It's all about staying informed and ahead of the curve. We also explored various market trends. We discussed how real estate doesn't exist in a vacuum. It's influenced by broader economic factors. Everything from interest rates to employment trends can have a significant impact on the real estate market. Grasping these influences can give you an edge, whether you're a first-time buyer, a seasoned investor, or just someone with a keen interest in real estate. In the end, understanding the economics of real estate isn't just about gaining knowledge. It's about empowering yourself to make informed decisions, to navigate the market with confidence, and to maximize your potential returns. Thank you for joining us today on House Lux Estate. Remember to hit that subscribe button for more insightful real estate content.